Welcome to Profits on Purpose, the podcast for ecom and CPG founders who are looking to scale their businesses profitably and purposefully. I'm your host, Nate Littlewood from Future Ready CFO, which is a go-to fractional CFO solution for seven-figure founders who are looking to turn financial chaos and confusion into clarity and confidence. Today's guest is Kat Weaver, who is a founder and CEO of Power to Pitch, where she helps early-stage founders win grants, craft fundable stories, and raise capital with confidence. We're going to be talking about some of the frameworks that Kat uses for a successful pitch. We'll be looking at some of the biggest mistakes that founders make when it comes to pitching and why some founders are maybe just not cut out for the fundraising process at all. Kat, welcome to the show. I am really looking forward to today's conversation with you.
Well, I'm honored to be here. Thank you for having me.
Of course. So, Kat, I understand that you are a former founder yourself, and at one point had quite an impressive streak of winning 22 out of 23 different pitch competitions you'd entered, which is remarkable. So I gather that you'd actually figured out this whole pitching thing long before you actually started your coaching business, Power to Pitch. I'm curious though, is this something that you learned how to do at some point, or was it just something you've always naturally been good at?
It's a great question. And I'm a two-time accidental founder, meaning I didn't even mean to start my own consumer product business. And to answer the question on it being a natural skill, absolutely not. When I did my
Okay,
first
that's good to
pitch,
hear.
yeah, there is hope. I am a living testament that it is possible. When I would go and on stage, my first pitch competition, I thought I was going
Mm.
to yak everywhere. I was so nervous. I totally
Wow.
blacked out. I've never to the point that it like your whole body tightens up, you don't know what to
Mm.
do. And that happened for maybe the first 20 of
Okay.
23.
Yeah.
And to this day, I still get nerves. I still have to work through things, but it is
Mm.
absolutely a skill that you can learn. It just took so many reps. And the only reason I kept pushing through is it was a means of survival for my first business. I lost everything to a
Mm.
fire. I didn't have a natural network or money lying around. So I
Hmm.
had to pitch. That was the only way to figure it out. And because I had little time and little experience, I had to put in the reps and figure out, and I ended up figuring out a system, pretty quickly. And that became kind of copy and paste for each win over the years.
Perfect. Well, that's certainly good news for the folks who feel like they currently don't know how to do this. You're a living testament that this can be, a skill that you can develop over time. I'm curious, when you were going through the process of figuring out how to do this yourself, like what were some of the biggest mistakes or blunders that you made along the way there?
Well, as a business or pitching?
Pitching. Like, was there any particularly embarrassing things that you did with, while you were pitching, or looking back now, you were like, oh my God, I can't believe I did that.
Well, I had a fair amount of wins, so things could have gone
Uh-huh.
worse, right? But I will say the very first pitch I did, my mom has a picture of it somewhere. I had my name tag stuck in my hair during the whole pitch. I won that to go into the finals to win $7,500 for the business. But I
Uh-huh.
went, literally just kept going, had no idea. And there's this giant name tag sticker just sticking out of my hair for this entire time.
Uh-huh.
And then there was another one where the clicker wasn't working for my
Mm.
deck. And I truly think one of the only reasons I won is because I made fun of myself. And I just kind of like laughed through it because there was no other way
Mm.
versus looking like I was nervous and hated that I was there, which was my
Mm-hmm.
genuine feeling, right? But because
Mm-hmm.
I used humor in that scenario, I was able to save it. And then I
Mm-hmm.
ended up winning that competition. But one of my favorite stories is of someone a friend that I went up against, the mic wasn't working on stage and it was
Mm-hmm.
still on as he passed it back to me. And he's like, wow, good luck out there. And the entire crowd of people in the audience heard it and started laughing before I had to step out there. And so I was like, oh my gosh, no one's even gonna be paying attention. What if this mic doesn't work? So that wasn't a
Yeah,
blunder on me, but I never forgot that because he was so embarrassed after like the little remarks he made
I
thinking the
bet.
mic was off.
Yeah. Okay. Good. And so When you talk to founders, I'm guessing that a lot of them have a bit of a tendency to kind of be fairly fixated on VCs, right? When it comes to thinking about where they can raise money from and, who they should be pitching. Could you talk a little bit about what some of the other options look like? And I'd also be interested to hear your thoughts on when each of those different options, may or may not make sense.
I love this question because the majority of founders I meet want to go after venture, but it is not meant for 98% of businesses. And I say that because it's a fact that only 2% of businesses raise venture. But what's even worse is that out of the amount of businesses that raise venture capital, 75% of them fail. That's a public statistic. And
Wow.
that's a very large amount. And because the reason is venture capital should add fuel to the fire. So essentially, if you don't have a solid plane, it's only going to help you crash
Hmm.
faster.
Yeah.
And I like to say that venture capital is plan F. It shouldn't be plan A. So really the
Mm.
first plan and thought that I advise every founder to go after is customer pre-sales, or we call it customer financing. If you're not talking to your customers, if you expect an investor to validate and go help you talk to the customers, you're doing it wrong. You are not a good founder.
Hmm.
You have to
Hmm.
put that effort first. There's so many options and opportunities to literally help pay before your product is even in the market. That's a huge thing, and help
Are
validate it.
you referring to platforms like Kickstarter as an example?
No, not even crowdfunding, like you just building up your own waitlisted network and putting a checkout page on your site and
Hmm.
promoting it. It doesn't even have crowdfunding is I would say that's going to be down on my list. The first
Hmm.
is figuring out your own ways to kind of help pre-sell the product. The second I would
Hmm.
advise is doing corporate grants. That is my
Hmm.
favorite option. Corporate grants are organizations like FedEx, Progressive even, and others get tax incentives to literally give away money for free.
Hmm.
That will check is in the mail, hits your bank account, and it is not a loan. You don't pay it back. They don't take
Hmm.
equity. And the organization gets more benefits of PR and marketing. I won six
Hmm.
figures worth. And I never had to pay back and help me scale and exit the company 6 years later. And
Hmm.
get into Amazon, do Good Morning America 4 times. So I love the corporate grant route. I do a ton of education on it. So anyone listening can DM me if they want a masterclass training I did on grants for that. I would say the third option is debt, lines of credit. If you can think about sources of debt, that seems like a scary word, but debt is cheaper
Hmm.
than equity. As in,
Hmm.
you're better off taking that kind of risk over giving up a forever chunk of the company. And I don't think
Hmm.
enough founders think about that as an option. The next on the list, I would say, is maybe crowdfunding. There's a
Hmm.
lot of big expenses with it. It's a whole beast within itself. Assume you're going to spend anywhere from 25 to 30% of what you want to raise on marketing alone. You should have built up a pre-audience. It's not, hey, I'm going to put it on a Kickstarter or a WeFunder and all of a sudden the money's going to flow. There is a
Hmm.
lot that goes into that. And then you've got to publicly report your revenue and finances and all this fun stuff. So
Hmm.
there's pros and cons to each of these, but I don't think enough founders think about the cons in a crowdfunding. But I would still say that's even a great option before going the dilutive route. And then after that, friends and family, if you've got a great network, tap them in, leverage them. After that, I would say angels. They're more forgiving and more involved than the average venture capitalist. Then
Hmm.
after angels, I would say angel syndicates, which is groups of angels, you can Google them,
Hmm.
that you
Okay.
can pitch and they can collectively invest and decide and invest larger amounts than the average single angel check. And
Hmm.
lastly is the venture capital side. It
That's a
is
long
not
way down
the
the list, isn't it?
yeah, no, like that
Yeah.
is literally maybe even after F. I don't know, I lost count.
Okay.
But there is a lot of options to consider, even do them in tandem. All
Yeah.
founders go after corporate grants, friends and family, debt, all these things before even considering the VC route because it's really
Mm.
not meant for the majority of businesses.
Got it. Got it. Okay. Going back to the first one, which is pre-sales, I understand how that could make sense if you're a founder slash business that already has an existing following and audience. I'm wondering though, if you were not in that situation and like you don't have a big social media following or email list or whatever, and had to go out and either pay Meta and Google to acquire those people, or you had to invest a lot of time and effort to, drive that traffic. Would your recommendation there change at all? And at what point does
No,
it become
because
no?
no, I would challenge that you're missing a lot of options within that. I
Mm-hmm.
think not enough founders are scrappy enough in these options.
Mm-hmm.
Before spending any money on acquiring a customer, I mean, today's day and age, even compared to 5, 6 years ago, 10 years ago, the accessibility of people, customers are free. In creating campaigns, daily posting on social media, reaching out to them from LinkedIn to X to Instagram to TikTok. I mean, you don't
Mm-hmm.
need a following on TikTok to grow and get virality around a potential product or idea and
Uh-huh.
start posting and asking questions for your network. That costs you nothing but your time. And so
Mm-hmm.
I don't advise any single founder to go spending on ads because that's not
Mm-hmm.
actually building a relationship or getting feedback from a direct customer unless they're actually paying, and it's going to be more expensive
Mm-hmm.
to acquire them because you're probably super early in the market. I'm sure the website's pretty low skills. Some of the basic
Mm-hmm.
foundations might not all be there. And
Yeah.
there's live events, walking even into farmers markets if you're CPG, doing, getting creative with
Mm-hmm.
some campaigns, but there are so many free, scrappy options to go after first, even before dumping money into ads.
Mm-hmm. Okay. Okay. That makes sense. And changing gears a bit, let's talk about the actual pitch and pitching process itself. Are there any, really powerful frameworks or approaches that you like to use when it comes to thinking about designing, constructing, and putting together a successful pitch?
So when you say designing, you mean a pitch deck.
Not necessarily. It could just be designing the script and figuring out
Okay.
what you're going to say. I
So
do have some
the reason
questions
I
for you a bit
asked is
later about like the script versus the slides and the order and so forth. But I guess yeah, I mean, what are some of the frameworks? Like if we were starting with a new client and you were brought in to say, okay, I want to raise a seed round from whoever. Can you help me with the pitch? How would you get started on tackling that?
so I've made my pitch template public. Anyone can
Uh huh.
access it. If you go to my Instagram at I am Cat Weaver, if you DM me the word template, it's going to send it to you. But the
Mm-hmm.
first thing that I work on with any founder is the story, because an
Yep.
investor in the pre-seed and seed stages, especially, invest into the founder before the business, truly. Like that's
Mm-hmm.
really where the investment is going.
Mm-hmm.
And if the founder isn't clear on their story, their connection to the problem, why they're the ones to tackle it, and driving up a narrative around what that looks like, they're not going to get very far. Anyone can
Mm-hmm.
regurgitate statistics and say how awesome their product is going to be. But if you haven't communicated that you're the one who's going to do the thing when things get tough, and
Mm-hmm.
you've given that feeling of, you're the one who's going to make it possible, then it's really going to make things more difficult, and the rest of the pitch comes from that story and how they're articulating the problem. And that's
Mm-hmm.
first. I don't change. There's no difference in type of business, stage, industry, nothing. We all we lead. That's like one of our core pieces and in part of our, so I call it the fund framework in terms of what the order will look like. The
Mm-hmm.
next after problem and story that a lot of founders miss is the statistical backup,
Mm-hmm.
because a lot of founders, we like to talk in, I think, I believe, I feel. But if you don't have a $1 billion exit yet, no one cares about your opinions. Investors aren't
Right.
going to care. It doesn't matter. And so we
Mm-hmm.
remove a lot of that language and a lot of the fluffy buzzwords like it's revolutionary, disruptive, game changing. And then we add in these facts to prove, to back up the problem, not just, oh, the market's growing. It's where's the proof that this is a problem worth solving, then
Mm-hmm.
solution, and so on and so forth through, kind of the rest of the things you can Google, you can get from my template. There's some standards out there, but those are the three core
Mm-hmm.
pieces that I will start with every single pitch.
Got it. Got it. So you mentioned starting with the story. Can we just double click on that for a minute? And could you kind of explain, like, what is a story? What are the components of a successful story? And is there any kind of best practices in terms of the chapters or the sections that you have within that story?
Really great question. I've actually never been asked that on a podcast before.
Okay,
So
good.
that's a really great question because I see many founders want to share multiple inflection points. So the
Uh-huh.
first thing is sharing a maximum of one or two major inflection points of the
Okay.
business or why you started. Or it might feel like, oh, there's all these different issues that made me want to start the business or why it came to be. We want to cut the noise. It's not that you're lying or not sharing things. It's just that investors are only going to really focus on those core details. You see thousands of pitches, so you don't want to give information overwhelm. So it's one
Mm-hmm.
to two core inflection points. For example, there was a guy was helping him at a chip business. And he's like, I was a banker for so many years. I left the business to help my sister start a restaurant. I helped grew the business. Then we wanted to start a snack company. And then we realized that we were snacking on this kind of chip. So we started a chip company.
Right. So that's
And
like four or five inflections there, right?
exactly. And I was like,
Okay.
whoa,
Okay.
technically all of this is part of your journey, but it doesn't make it all relevant. And so we
Right.
kind of we
Mm-hmm.
pull out the one or two most crucial inflection points that actually relate
Mm-hmm.
most or best to the problem at hand and the solution, kind of like
Mm-hmm.
thinking backwards if you have to.
Mm-hmm.
And the second part of that, and the reason we lead with a story is because you always want to pitch, and this is if this is the biggest piece here for anyone listening to like write this down and really sit with this one, it's that don't ever assume you're pitching a target consumer, as in
Mm-hmm.
they're gonna love it, buy it, eat it, take it off the
Mm.
shelf. You want to describe it in a way where they can go pitch it to your target consumer. Like they should
Mm-hmm.
have that much clarity around what you're doing to go describe it to someone else because you don't want to assume someone understands the space or likes your product or all those things because now you've cut them out of the entire narrative you're about to share in assuming that.
Mm-hmm.
So the goal of the story and what I'm getting at is when you invite someone into your world and you add those personal details to the problem, now they feel invited whether they're a consumer or not and they're
Mm-hmm.
going to remember more of the transformation of what happened with you and the problem more than the actual information that you share throughout. And some people might be more technical than others, but there's
Mm-hmm.
always a point of a story, and that helps you bring in and get someone to kind of understand, feel, or empathize with you. If, again, they're not going to eat it, they could still invest in it, kind of thing. Like
Okay. Okay.
one of my uh our founders, she is a date bike company. She got invested by Kevin O'Leary. Kevin O'Leary from Shark Tank introduces her to this guy to invest, and he doesn't even like dates. He's like, I want you to add more sugar. And she pushed back and was like, that's not the core of what our product is doing. We want it to be low sugar, not spiking your blood sugar, all the things. And he's like,
Mm.
love that. All right. And wrote her a check. Like he didn't have to eat it, but like that what she stood for and what she was doing. So he's really investing in her more than the date bike company at the end of the day.
Kat, I gather listening to you describe this story in the pitch that there's kind of a few different elements to this. One is the founder, and I guess, founder problem or founder market fit. There's also the product, and you could talk about how great or amazing or cool the product is. But, from an investor perspective, I assume that they're probably also interested in like, what is the business opportunity? Like, what is the competitive landscape? Like, how
Of
profitable
course.
is this? How do you think about kind of juggling and balancing those three elements? And even are they the correct three elements to be thinking about here? Is there, maybe a fourth or fifth?
Yeah, it's absolutely part of it. Of course, the founder is important, but if what they're doing doesn't make sense or there isn't a market for it, that's they're gonna hit next. And
Yeah.
so I'd say really after like story problem, statistics, solution, then it's traction and validation, then it's the size of the market and who you're serving, then it's talking about the competition, financials, go to market, business model, more high level on the team, and then really like an ask. Because the
Mm-hmm.
thing is, in an initial investor meeting, they're not writing a check. It's just to get to
Mm.
know you. And you're not supposed to brain dump all the information. The goal is to get a next meeting. The goal is then to get
Yeah.
in due diligence where that stuff is shared in a data room where they can actually
Mm-hmm.
sit and get through the nitty gritty details of the model of their market because screenshotting your entire P&L on a pitch deck isn't going to give them any sort of confidence at all. They're going to actually want to sit with your full
Yeah.
financial model and things. So again, it's meant to be high level, but it all stems from story and problem, and the rest are kind of weaved together like a story.
Yeah.
And you think about it as like a timeline in order, because if you read a book out of order, it's confusing,
Mm.
it's hard to get through and remember, and you might check out. So
Hmm.
there is really an art to kind of weaving these details together.
Yeah, yeah. No, I'm so on board with this idea. I'm not sure if you're aware. I spent a little bit of time mentoring with an accelerator program a few years back, and it is crazy how much more efficient it is to put together a bunch of slides when you actually know what it is you want to say. It's like, okay, this is my story, like bang, 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 like these are the 10 slides I should have. It's night and day in terms of the overwhelm that at least I felt when I was going through it myself. But listen, I'm curious, in your experience, let's assume that a founder had lined up a pitch and it's a couple of weeks out. Maybe it's to one of these angel syndicates, for example, that you mentioned. Um, and we've got kind of 2 weeks to prepare for it. Tell me about the relative importance of the pitch slash story, i.e. the words coming out of your mouth versus the slides and other visual assets that you might have. Like, how much time should we be spending on those two things?
So I love that. I was going to bring up the when you said when you have the script and then it is easier to write the deck, we don't review a founder's pitch deck until we fully approve their narrative, because
Hmm.
that narrative is the most important part. We've helped founders raise without ever needing a pitch deck. We've helped
Hmm.
them raise with literally just straight that when they have that confidence in that language, we call the deck like the sidekick. It's a backup dancer. It's just supposed to
Hmm.
summarize. It's a teaser. It shouldn't be a
Hmm.
brain dump of all the information. So I our core is literally outlining that language first, and then comes the slide deck, which I hear founders take, I mean, tens of hundreds of hours in updating
Hmm.
their deck over and
Hmm.
over. And then we go and ask what the narrative is, and they're like, "Oh, no, no, I got the design down." And it
Hmm.
might feel uncomfortable because a lot of us are visual, but it's going to cut the time in half because you're pulling exactly what you want to say and
Hmm.
summarizing it exactly on those slides. There shouldn't be new information. It should only be 10 to 12 slides,
Hmm.
15 absolute max, because
Hmm.
no one's got that kind of time. And this is a doc send or doc hub stat where the average deck gets scanned in 2 minutes. So no
Hmm.
one's actually taking that long with it.
That's not a lot of time, is it?
No, it's literally like click, 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 practically. It's
Yeah.
seconds per slide.
Yeah.
And so so many founders over index on that, and it breaks my heart because they're like, I didn't know I shouldn't be spending this much time on it. We kind of
Hmm.
glorify this pitch deck. Investors ask for one is kind of just like a litmus test in a way.
Mm.
But the investor, whether they seem like it or not, make emotional decisions. And that's why they want to
Hmm.
hear you talk about it. They're not going to
Yeah.
read about it. And so that deck is just a very, very small tool in the toolbox, essentially. It's not the
Mm.
hero, it's not the main event. And for one example is the reason we get so firm on the language is because assume your deck is going to fail. Assume you
Hmm.
can't share a slide. Assume you can't show the product or have a visual. How can you verbalize it to someone without needing that?
Yeah.
And we had one founder pitching 8 investors on a live call, and her deck failed. The screen froze, and no one told her for the entire pitch. And then after they were like, "Oh, did screen work for you? It didn't work for me, blah, blah." And she's like, "Oh my gosh, I'm so sorry." And they said, "Actually, we didn't need it because we totally understand where you're at. Like,
Mm.
don't even bother.
That's
It's
a good
all."
sign,
Yeah,
right? Yeah.
exactly, and so that's what
Yeah.
we had prepared her on, and that's
Yeah.
what was a perfect example of, like, this is why we forced you so hard and, like, pressed
Mm.
on getting that language right, because spending
Hmm.
time on the deck, it's not what's going to get the check, and my new
Mm.
tagline has been, "Decks don't get checks."
I can just imagine that tattooed on your arm somewhere.
Yeah, new T-shirt, sweatshirt, tattoo, hat, I don't know.
Nice, nice. I'm curious, Kat, in the age of AI, I'd love to hear your thoughts on how AI is impacting this whole process. It seems to me that there's a couple of very obvious opportunities. One is, creating the deck. There's plenty of, AI-based deck creation tools out there. Like, I'd love to know if you're a fan of any of them or that process. But also on the investor side, I mean, some of these angels, VCs, funds, groups, whatever, they receive hundreds, if not thousands of decks and pitches a year. So I have to expect that they're leaning into AI more and more to actually analyze these things, review the slides, look at whatever's written in your email. I'm wondering if, on that side of things, if there's any way to kind of like hack the AI system, so to speak, and make the documentation that you're submitting, more likely to get picked up?
So I'm going to answer this a little bit differently than you might want me to, but
Mm-hmm.
what I hear from a lot of our investors is that AI has made it worse for them because there's all these tools and fundraising platforms that are scraping investors' information without asking them, and
Mm-hmm.
then saying that, oh, we have, hundreds of thousands of investors in our database for you to connect with. And these
Mm-hmm.
investors are getting bombarded more than ever because now their information is publicly on these sites and they didn't ask to be there. So it's
Yeah.
actually much more difficult to get their attention. So the founders who are winning aren't using these AI tools for outreach. They're crafting very what's the word, like personalized messages. I've looked at
Mm-hmm.
your portfolio, I've engaged in your content. It's more of
Mm.
a quality game. I had one founder who paid for a 15,000 investor email list. 15,000.
Yeah.
And shocker, he didn't get one single reply. And he's like, I
Wow.
wonder why. Well, you're amongst all this other fluff, and the investors have told me, they're like, I can tell when they've used a tool, when it's AI, it's like they don't actually know me, they don't want to get to know me. It's a personal relationship. Investment is a marriage.
Mm.
And so if they're going to do this spray and pray model with all these tools, I know so many founders are going to waste their time and keep wasting. And
Mm-hmm.
so many founders ask us, and it's like, craft your personalized message because
Mm.
these investors are noticing and they're indexing higher now that you've taken the time to get to know them and make sure
Mm-hmm.
you're a fit for the portfolio versus this insane amount of outreach because the
Mm-hmm.
relationship does matter. And I will say on
Yeah.
the AI building side, none index well enough on the language. I haven't found one I liked. We
Mm-hmm.
teach our founders how to fish. We've got tools and resources within the founders that I coach. But it's just it's really sloppy. I think a lot of them
Mm.
look the same and like pretty cookie cutter right
Okay.
now, I will
That makes
say.
sense.
But again,
Yeah.
it's not like there's so many free templates out there that there's no excuse. I think
Yeah.
like it's pretty easy to get your hands at least on a foundation or use it for a foundation and then tweak it. But I know
Mm-hmm.
a lot of investors I've heard more and more of indexing on, kind of trying to review deals with AI, but it's at a lot of later stages. It
Mm-hmm.
really is. I think we're still kind of early in that sense, but the founders who are getting meetings are the ones who are taking the time to personalize.
Yeah. Yeah. Relationships and building them. You heard it here, folks. It's yeah, central to this process. So, Kat, I'm a bit of a finance nerd, as you know. So I hope you didn't think you were going to get away without me asking you a couple of numbers and finance related questions here. I'm curious if you were working on a deck or presentation for an ecom or CPG founder. What are some of the top two or three financial metrics that you think we should be including in a deck?
So it's definitely going to be for an investor annual recurring revenue, ARR, monthly recurring revenue, MRR, the lifetime value of a customer, LTV, average
Hmm.
order value, AOV, maybe the churn. It could be opt-ins even for email, even though that's not a financial metric. Thinking about the
Hmm.
actual conversion or cost per customer, customer acquisition cost, as well as, if some founders are doing both e-com and maybe retail, like what their velocity is,
Hmm.
things like that. But those are the top metrics because again, no one wants to see a full P&L pasted into a deck. So
Yeah.
focusing on those metrics are an
Hmm.
awesome baseline to
Hmm.
start with, and also like month over month growth, maybe
Yeah. Yeah.
growth year over year, those kinds of things, not just revenue metrics, dollar amounts, it's also growth percentages are going to be important to the
Hmm.
investor.
I assume because you're using growth or top line, revenue as kind of a proxy for product market fit, and I guess it's an indicator that you're solving a relevant problem and people want
Exactly.
that solution. Yeah. Okay, that
Yeah,
makes
because as
sense.
you know, just top line revenue doesn't mean profit. It doesn't equate to cash flow. It doesn't
Oh
equate to
yes,
you actually
I'm very
going
familiar with
in
that problem.
customer. I
Yeah.
know you know that, but a lot of founders listening here
Yeah.
like, oh, I'm gonna like just share how much I make. We had one founder who
Yeah.
was like, oh, I don't want to share my revenue because they're going to be turned off by it. I'm like, if you think for 1 second you're not going to get asked your revenue in an investor meeting, or they're going to want that, an index you on that, you're out of
Yeah.
your mind. You got to be
Yeah.
transparent about it.
Yeah. Yeah. Absolutely. So you obviously work with a lot of founders in helping them get better at telling their story and putting together the pitch deck or the slides and so forth. As founders come into this process and, begin working with someone like you, what are some of the common problems or themes or issues that you're kind of coaching out of these people?
The first one is that they don't have to build a pitch deck first.
Okay.
That's a big problem. So many people are like, "Oh, I already have a deck. I'm good to go." And then we look at it and we go, "Oh my God, you do not."
Right.
The the second is mindset. I
Uh-huh.
know I would say this is more of a female founder thing than others. They
Mm.
ask for way less than what they're really worth. And or
Mm-hmm.
two, they feel guilty accepting money or taking money.
Mm-hmm. Mm-hmm.
Uh, Whereas we coach a lot on, if you're giving up a chunk of your company, that investor should be lucky and honored that they're given the opportunity to be on your cap table. Not,
Mm-hmm.
oh, I'm going to take any money. The right and a mature, advanced founder is picky with who they choose
Mm-hmm.
to be with on their cap table. So it's a lot of mindset
Mm-hmm.
because
Mm-hmm.
running a company is mental enough as it is. It's hard enough.
Yeah.
And then you add in the complexity of a fundraise and investors and now having to report to a board and manage their expectations. That is like another business within itself. And it
Mm.
sure feels like it. And the third is, this is a really big one, is removing the buzzwords. Every founder wants the same
Mm-hmm.
game-changing, revolutionary, best in
Right.
class, full list. And
And that was the
the
stuff that you're saying earlier you should replace
exactly.
with data and facts and figures, right?
Exactly.
Yeah.
My rule of thumb is that if you can take a sentence and paste it into someone else's pitch and it makes sense, that means you need to delete it or add detail.
Huh. That's a really good rule of thumb. I like that.
It
Yeah.
goes a long way. It sounds really simple, but I was looking at a pitch yesterday where the founder was like, this is going to be game changing for us. And I was
Yeah.
like, you don't even need this. Don't even elaborate on this because this tells us nothing.
Yeah.
Just completely get rid of it. And they're like, what? That feels exciting. And when you think of an investor getting hundreds of pitches a week, and if they all say that, it doesn't
Yeah.
actually mean anything to them anymore.
Yeah. It just becomes like a non-word. It's nothing. Yeah.
Exactly.
Okay. Okay. Kat, tell me about the timeline for this fundraising process. Like, if we knew that we wanted to raise, $1 million or $2 million, let's say, for our CPG startup, how should we be mapping out the timeline for that? And if you were the founder, how much time do you think one should be budgeting over the course of their week? To actually working on this? Like, is it a full-time job? Is it a part-time job? Are we talking months? Are we talking years? What?
Two
Come.
full-time jobs.
Okay.
If you really want to raise money and have those kinds of expectations, you have to be willing to put in a lot of extra work. If you have a
Hmm.
team who can run the business, well, you can fundraise. Awesome. Not everyone has a co-founder. Not everyone has that kind of budget to do that. So I would say this is technically situational. Most founders underestimate the amount of time they need. There's this really great example for this founder that we supported that was, it took me 7 months to raise in 2.5 weeks
Hmm.
because the amount of prep work to then actually opening and closing a round is so much effort. It's not, having a year-long open round and just taking checks in and out. You do want to set a timeline to then create FOMO for investors to get in or out and make a decision because they do make emotional decisions. They want to feel like you want them to feel like they're missing out on this incredible deal that they'll never get this kind of offer again at this
Hmm.
valuation for your company. And the majority of deal, I mean, it can take anywhere from 3 to 8 months on
Hmm.
average to
Hmm.
prepare
Hmm.
and then go execute because
Hmm.
the relationship building needs to happen way before you're ready. We
Yeah.
say you should start fundraising before you need it because when you
Yeah.
do it when you're desperate, it's going to be a problem. So if you're not
Hmm.
relationship building with investors, setting expectations, or even a lot of funders don't think you can ask the investors what KPIs, key performance indicators, and metrics they want to see for you before you
Hmm.
go pitch. What would make
Hmm.
this a heck yes? What would make you excited for us to join your portfolio? And they will
Mm-hmm.
literally tell you. And so then you kind
Mm-hmm.
of get to build towards that and reset expectations because I bet the metrics that you're thinking of is not going to be the same as what the investor is actually wanting at the end of the day. The
Mm-hmm.
macro environment changes, markets change, and so it's not a 2 week thing. Like
Oh yeah.
it takes months upon months, especially for people who don't have a natural network.
Yeah. Yeah. I want to circle back on this, starting earlier thing. I'm not sure if you're aware, but I was a founder once and spent a fair bit of time fundraising. And I certainly made the mistake that you just described, which is starting too late. But looking back, I mean, before I realized that I needed to raise this money, there was a period of time when, I thought I didn't. And I was, doing what most founders do, which is running around like a crazy man, working ridiculous hours, just, trying to keep my head above water and keep everything going. Now, if you'd said to me at that point, and in that point of time, I would have responded if you'd asked, like, no, I don't think I do need to raise money. And if you'd come along and said to me, hey, you don't need to raise money now, but you should start building relationships with investors, I probably would have said to you, what are you talking about? I'm working 60, 70 hours a week. Like, I don't have time for that. And I don't really feel like I need them. So why should I invest time in that? Um, Talk to me about that situation, and how would you kind of consult or advise a founder who might be having similar thoughts to that? Because I mean, let's be honest, I think a lot of founders get into this game, this ecom CPG space, without a great appreciation of how long it's going to take, the mistakes that they're going to make along the way, the cost of these mistakes. And I mean, like getting into retail, for example, you've got to pay for slotting fees, placements, promotions. Like the expenses are ridiculous, and you can go for many, many years with accruing losses. So, what would you say to a founder who is kind of at that space in terms of their thought process, and they're thinking, I don't need to do it. Why should I waste time talking to investors now?
Every founder can find 10 minutes a day.
Mm.
That's what it takes. 10 minutes a day.
Hmm.
One of the
Hmm.
daily non-negotiables for the founders in the program is you have to send message and comment and interact with at least 3 to 5 people every single day. That can even
Hmm.
take less than 10 minutes. And
Hmm.
even that sounds so small, but if you're interacting with an investor's content, you're adding ones you're not maybe aware of, you're getting maybe invited to events, you're seeing what they're posting about or sharing or who they're talking about in their portfolio, what growth metrics are they really looking for to
Mm.
really start if you're not maybe ready for it, 10 minutes a day. Like, it's
Yeah.
truly that simple because that will compound. Think over the span of a month. If you spend 10 minutes a day messaging 3 to 5 people, what your
Hmm.
hit rate is going to be, or even asking, hey, we're not raising yet. What kind of KPIs do you look for? Like those same kinds of questions. You get to do a
Mm.
little bit of research, but everyone can find
Hmm.
10 minutes.
Mm. Yeah, that's a very good point. Very good point. I want to talk about the people that you do let into your program, and more importantly, the people that you don't. I understand that not everyone who applies to work with you, you will actually agree to take on. Can you tell me a little bit about some of the screening that you do, and what are some of the common reasons that you might say thanks but no thanks to a founder? I don't think I'm the right fit for you.
Excellent question. So we look for four core attributes of a founder. So the first is
Hmm.
coachability, the
Hmm.
second is transparency, the third is grit, and the fourth is passion. If a
Hmm.
founder's not all four of those things, we're going to hate each other. It doesn't matter
Hmm.
how much you pay me. No, thank you.
Hmm.
The
Hmm.
coachability piece is the biggest because we'll get a ton of founders who are accomplished, great business, and they're like, no, I already got it figured out. I just want to pay for intros. I'm not a broker. I'm not here to make intros. And if I didn't vet the
Hmm.
deal flow, you're asking for a shortcut that you don't deserve.
Hmm.
And so if a founder also, we're making suggestions and they're going to be combative, I will
Hmm.
happily take out a founder and say, this is not a fit for you. If you're
Hmm.
not going to trust someone who's helped founders raise over $50 million and counting, 51
Hmm.
million as of yesterday,
Hmm.
it's,
Congrats.
I mean, yeah, it's like, their ones feel like my wins. And
Mm.
so it's we're like an extension of the team. So I can't work with someone
Mm.
who's to be rude or not ready
Mm-hmm.
to change what they're doing.
Mm-hmm.
And the second, in terms of transparency, like founder not willing to share their revenue. I can't help
Mm-hmm.
you if I don't know the facts. The
Mm-hmm.
investor's not going to trust you if you're not willing to be transparent. The third,
Mm.
in terms of grit, is it's going to be so hard. If you think you're going to get shortcuts, if you are going to give up easily, then being a founder isn't for you in general. We
Mm-hmm.
love
Mm-hmm.
a gritty founder because we do bring investors on our calls. We do make investor introductions. We do want to
Mm-hmm.
shout these founders from the rooftop because seriously, I selfishly want nothing more than to make more testimonials, right?
Mm-hmm.
They win,
Mm-hmm.
I win. This is, I mean, it's a two-way street. I want nothing more for them to succeed. And then in terms of
Mm.
passion, if they're not excited, how can you expect me or an investor to be excited?
Yeah.
So
Yeah.
it's more that we're looking for character than type of
Yeah.
business. Now, we'll say to a founder, if it's a lifestyle business or something small service-based that's not meant for venture capital, we will
Mm-hmm.
say, like, here are other options. We have a grant program, non-dilutive funding. If you need less than 150K, 200K, don't go after
Mm-hmm.
venture. There's so much
Yeah.
non-dilutive capital out there we can help you get. And so we do have options to help support them if they check
Yeah.
those boxes.
Yeah. Yeah. So one of the financing options or funding options we spoke about earlier, and you mentioned you'd actually personally had a lot of success with this, was like corporate grants. Can you tell me a little bit more about that? Like, how should a founder start exploring that? Like, is there lists, is there databases? Like, how can you start to figure out what even your options are in terms of corporate grants? And how is the pitch that you might give for one of them different to the pitch that you might give to a, angel investor, for example?
So many questions in one. Well, to try and hit all of them, now the pitch is going to be so similar. The only thing that changes is the ask. And I tell our
Okay.
founders, when you have the right script, it becomes copy and paste. Those exact categories transfer into every
Hmm.
single grant application. So it's a really, really awesome transferable thing. That's why I say do it in tandem if you're raising or not.
Hmm.
Your 5 to 7 minute investor pitch and the ones we help build with our my fund method, it's copy paste. Now,
Hmm.
in terms of, a founder can Google until their eyes bleed to find a list, right? But what good is a list if you don't know how to utilize the list? So if you're
Hmm.
pitching wrong, you don't know how to pitch and communicate the business or tell your story and articulate your traction, or you're even asked the use of funds. If you are being lazy about that, that list and any opportunity or grant you come by is going to do you no good. And you're going to
Hmm.
waste your time applying. I
Hmm.
see the same mistakes made over and over again. And so in our grant prep program, we literally have them go through that copy paste pitch outline, where
Hmm.
review and coach them on it live, and then give them the database of 200 plus funding opportunities we share every single month. And now
Hmm.
there's 200 in there, but we say start with 1 to 3. It sounds like I have
Okay.
one founder who's like, I'm going to apply to 100. I'm like, whoa, don't do that because you should be running the business. Grants aren't monthly recurring revenue. They're bonuses, they are PR, they are credibility. It is not
Mm.
set cash flow for your business. So you need to
Hmm.
be going to run the business. So spending 1 to 2 hours weekly or biweekly on grants is plenty. That's really
Hmm.
all a founder needs to do because when you have that right foundation, it is literally copy and paste into opportunities.
Hmm. Okay. So is your grant preparation course or offering, I guess I can call it, is that the
Yeah.
same course that you would offer for people who are wanting to raise from like, angels or high net worths or whatever?
No,
Is it?
so our baseline to get grants and non-dilutive funding is founders who want to get their feet wet start, and those who qualify for grants can be from idea stage, zero in revenue, up to 1 million in annual recurring revenue. So there's a good
Hmm.
range.
Yeah.
But that's different because the founders who want to raise, 300K plus to 3 million, that's going to take a lot more work, effort. We look at the pitch deck. Most grants don't ask for
Mm.
one. Go through the data room. We talk about investor strategy. We bring them investors on for live deal flow. So
Hmm.
one of the investors we brought on, one of our founders is up for a Shark Tank style pitch for $1 million investment because we brought the
Wow.
investor on our call.
Huh.
And so we love to give those kinds of opportunities, but I'm not going to give that to a founder who maybe isn't venture backable ready or wants to even go after venture. So
Yeah.
the grant side is a great foundation, but our real advanced elite members are we're going
Mm,
through the investor process. And we do give them the grant list and help them on the grant side because we say do it in tandem. So if they reach that,
mm-hmm,
they get the grant portion included on the investor side as well.
mm-hmm. Okay, cool. Kat, I'm introducing a bit of a new ritual here, which is asking every guest about their favorite business KPI or performance metric. I'm interested to know how often you look at it and why. And to make, because I think you can handle it, I'd love to know your answer to this question from two different perspectives. One, now as the founder of Power to Pitch, like what are the KPI or metrics you look at now for your current business? But if you were back in the seat of being a founder for an ecom or CPG brand, what was your favorite business metric back then, and what did you like to look at?
I'm such a different business woman compared to what I was in the first business. I'm invested in
Mm-hmm,
myself and coaches. And so looking
mm-hmm,
back, it almost feels like I'm not even talking about the same person anymore, which I think is
mm-hmm,
a really, really awesome thing. And I would say in the current business, so let me start with the first business. I mean, it's not a matter of favorite. It was just in terms of, you know, really units sold. I mean, it sounds like
mm-hmm,
so basic, but I did a lot of third-party launches. And
mm-hmm,
so in terms of the quantity that I could do in those third-party launches and repeat it, that's actually how I sold the business to prove that I could repeat these third-party launches with Good Morning America. And so
mm-hmm,
we just looked at the volume, and then with the volume, then we would say, all right, how many different multi-packs now do we want to offer to increase that volume and that quantity in our
mm-hmm,
sell-through? So we track that a lot to try to bundle, not necessarily increase prices, but create more value to move more product more quickly, as simple as that sounds. And then for Power to Pitch, it's how many people do we have in our funnel that we
mm-hmm,
convert to work with us? Now, we do
mm-hmm,
turn away a lot of founders if they're not a fit, but at the end of the
mm-hmm,
day, it is volume in terms of how many people are we going to talk to and engage with that we can make an impact and support. Because
mm-hmm,
my two next milestones, one is getting founders to 100 million in grants and venture raised. And the
mm-hmm,
other side of that is helping 10,000 founders become more fundable. Whether that's through
mm-hmm,
my content and or direct business, it's truly at my core mission to help founders get funded faster. And I want them to learn what it takes to become more fundable. So I'm
mm-hmm.
looking on that in from two lenses.
Okay. I love it. I love it. Cool. Well, Kat, this has been an absolute pleasure. I appreciate all the wisdom and advice and expertise that you've shared and encouraging us to think a lot more broadly about where we raise our capital from. Like we said at the outset, a lot of founders go into this process of looking for money and their default is venture capital. But as you heard from Kat today, that is option, I don't know what you said, F or G or Z. It's a long way down the list anyway. And there's a whole world of other options out there that you should probably be looking at before you obsess over, raising money from a VC. So, Kat, thank you again for coming on the show. Where should folks go if they would like to learn a little bit more about you and what you're up to?
Well, you can apply to directly work with us at powertopitch.com/apply or DM me on LinkedIn or Instagram at Kat Weaver on LinkedIn, at I am Kat Weaver on Instagram. I couldn't get my full name on there and on YouTube. But if anyone listening wants to message me the words on Instagram template and or grant masterclass, I'll either send you the grant recording and or my direct pitch template to get that outline for free. It's all there. I want to make this information more accessible. So I'm all over the internet there, but LinkedIn, Instagram, and YouTube are my favorite places to be.
Okay, perfect. Well, thanks again, Kat. Appreciate you coming on the show, and we'll be in touch. Take care.
Been great. Thanks so much.